Hello traders, welcome back to my channel. I'm back with another video, and this is a second edition of the ID50 trade. And basically what we are looking at here is a recap of the ID50s that I took during these past 2 weeks, and what could have happened for me to see these ID50s, and what could you have looked out for if you wanted to take these ID50s. So I'm just gonna go through this recap, and with me here I've got 4 pairs, which is USD CAD, Euro odd, GBP odd, and Euro NZD. And I'm pretty sure I sent you 3 of these, which is Euro odd, GBP odd, and Euro NZD. So we're gonna look at the 4-hour time frame, basically to see how can you actually take advantage of higher time frames and trade the ID50. All right, once again, when I post videos, I love to first have us go to the whiteboard and have a look at a little bit of some learning or concepts before we get into the charts. I'm not going to waste too much of your time. I'm just going to explain what I explained previously about the ID50. All right, I'd say the ID50 is the first pullback from the peak. All right, so the first pullback towards the peak is what we call an ID50. So the market, we all know, it doesn't go in a straight line, but the market prints higher highs and higher lows, or lower highs and lower lows. So what you term an ID50 is that initial first pullback to the 50 EMA, because you've got your 50 EMA moving average right there. So that is what you call your ID50. So in this case, this then becomes our ID50 right here. All right, and I said for us to take a safe ID50, we want to see the market break the high or the low of the neckline. So what we mean is we want to see the market break that, and then secondly, what we look for, we want to see the ID50, the 50 EMA coming through around those areas there, and then we wait for the market to actually pull back and retest that area, pull back, retest that area, and drop. So that's what you want to see. So first of all, what we want to identify is a peak formation. All right, it can be a double top, head and shoulders, whatever. And then secondly, for us to get the safest ID50, we want to see that neckline being broken. All right, that neckline being broken. And then thirdly, we want to see the 50 EMA around the area, the 50 EMA around the area. As soon as we have the 50 EMA around the area, what we want to see is the market pull back. We want to see the market pulling back, all right, back into that 50 EMA there, and then we can have the continuous downtrend. All right, so I hope this makes sense. And this is not the only information about an ID50. There's a lot involved in it, and I'm gonna make a different video for that, for you to get more knowledge as to how can you clearly and easily identify ID50s, and also that you can anticipate them even before they happen, which makes it even so much easier. So I'll make a different video about that. But in simplicity, this information that I've shared with you will make you to be able to trade ID50s easily. All right, so now you can see this on any time frame, and that can be 1 minute time frame, 5 minutes, 15, 30, 1 hour, 4 hour, monthly time frame. You can see it anywhere and actually trade away from that zone. Okay, so I utilize it mostly when I'm doing 4 hour trading. Okay, I utilize it when I'm doing what? 4 hour trading, and the reason being, it kind of gives me a weekly move, a weekly market move, so I can hold for the next 3 days or 4 days or whatever. All right, and then again, whilst I'm holding, I'm also paying attention to levels and whatnot. And I can guarantee you, even sometimes when you are not sure where the market is supposed to go, just by identifying an ID50 on one of the pairs, you can actually be able to then deduce how the market will move on the other pairs. You can actually tell that this is how the market will move. I'll show you that quickly as well in the charts. Okay, so this is what you need to pay attention to, and please practice this. You'll see this come out, and you can just trade this type of pay and forget about anything else. All right, now let's get into the charts and see the examples of trades that I traded. We're back in the charts, guys, and we're gonna start with GBP odd. This is one of the pairs that I showed you when I was trading in ID50. I know if you look at this chart right now, you might not see any ID50 here. I mean, well, you can see ID50s. For example, you have got an ID50 right there, you have an ID50 right there, you also have another ID50 today right there. So there's a couple of ID50s. There should be another ID50 on the 15 minutes time frame right there as well, another ID50 there. There's a whole lot of ID50s, but we want ID50s that are going to be long term. That is what you are looking for. And as soon as you get those long terms ID50s, then you can capitalize on holding the market for a couple of days. All right, so now what I then look for from a 4 hour time frame, I look for peak formations from a 4 hour time frame. So when I look for peak formations, my emphasis is on what the direction of the market is. All right, so for example, in this case, I had anticipated that the market is supposed to be a sell. So after counting my levels and everything, I arrived to a peak formation. So this is my peak formation right here. So if you look closely, you'll find that is your peak formation. All right, now after this being your peak formation, the market had already moved away from the peak formation and then retraced around Thursday, Friday, and it closed right there. Now the nice thing, the market was sitting at the 50 EMA. So you haven't seen all this, the market was sitting at the 50 EMA. So that means what you were expecting was a simple drop off the market. All right, you're simply expecting a drop off the market. So now let's see if we can find all our check boxes in this instance. So number one, what we have is a peak formation. Again, I'm not going to show you how I identified this as a peak formation because that's a different topic altogether, but this is a peak formation. Where do I see my peak formation? I see a double top right there, or an M formation. So that is my peak formation. The next thing that I look at is where is the neck, the low of my neck. In this case, the low of my neck is right here, and it was broken by price right here, and price went away. So you are somebody who doesn't like trading peak formations. You can ignore them and rather focus on this. All right, so as you can see, the market broke that low right there and then came back on Thursday and Friday and closed the market right there. There is your 50 EMA right there. moving across there. So I've seen my 50 EMA, I've seen the break of the neckline, I've seen the pullback coming towards, and the market is closed. So I've seen everything. It checks my boxes. So what do I expect next? I expect an ID50. I actually entered this pair, this position blindly, to be honest. I didn't even do any analysis. I just thought, you know, this is a Monday, I don't care when this is gonna move, I'm just gonna take the sell and move with it. Now look at what happened. The market actually dropped on I think it was Tuesday or Wednesday. That's when the market dropped down and stopped there. Now I'm counting my levels as we move, and then I saw the market retrace back, and I wasn't even worried, and the market dropped again, another drop, and that is where my take profit was hit, because I was expecting the market to come down to that neckline of that W down there. That is where I was expecting the market to drop. So if you look at it from the 1 hour time frame, you can't clearly see what exactly I was trading. You can't clearly see it, but you can actually see this being your Friday, this being your Monday, this being your Tuesday, and the market did move on a Tuesday. It dropped down and then pulled back on a Wednesday and dropped down again on a Thursday. So I had 1, 2, 3, 4 days of holding. All right, I've had 4 days of holding until I came out right here. And again, you can see a nice double top right there, and a pullback to the 50, and a break of the neckline right there, and the market is actually pushing down, which is the sort of setups that you want to be looking at. And just trade the ID50 and push down. All right. Now if you put this to the 15 minutes time frame, you can see for yourself a nice setup, textbook setup. Nice textbook setup right there. You should have an Asian box right here, and this being your Asian box, you can see the market went to the 200 and formed a nice setup, and it is moving away. It might even create an ID50 again for the 15 minutes as well, but I just wanted to show you how an ID50 works even on a smaller time frame. Now I then moved on to Euro odd, but this pair Euro odd I did not really hold for long. Reason being, when I looked at it, it was a good ID50, but it was too slow for me, so I didn't really hold it for long. Again, it is the same issue. You've got your peak formation right there, peak formation right there, and then you've got a neck broken right there, and then you've got the 50 EMA inside, and then after that you've got the market pulling back. So you've got your peak formation, market pulls back, and then you've got a drop of the market. So imagine all I had to do was to take a Monday sell and held all the way up to that neckline. That was my target, the neckline there. I didn't even look at this week, but that was my neckline target. But imagine if I kept on holding, this is how much I could have ended up having. So you can track any pair just by trading the ID50. I'm showing you that these things work, guys, and they work very well, especially if you catch them on higher time frames. You can hold for a long time. All right, now let's go to Euro NZD. This one is my favorite because the way it moved, it was so marvelous. All right, so you look at it again and you're like, this thing has been consolidating for a long time now. You can see the whole consolidation right there for a long time. The market hasn't been moving, and all of a sudden the market pushed down. That shows us the market is now ready to exit that level. So the reason why you are not catching peaks is because you don't want all this rubbish. All right, you don't want all this rubbish. That's why you are not catching peak formations. But immediately when you see the move away, that's when you're like, okay, this is exactly what I have been waiting for. I know for some people, they might come here and say, okay, I'm gonna draw a trend line there and say this is a breakout, and a retest, whatever. It might work as well, whichever way you want to put it. But it's so simple, guys. All you have to do, switch to your 4-hour time frame and just sit there at the 4-hour time frame, and there you go. On your 4-hour time frame, what you see is a triple top, right? A triple top right there. So you have identified your peak formation, and then after your triple top, the next thing that you see is your neckline broken. Look at how much they maintain the low. Even if you use that lowest of lows, they still maintain it right there. All right, even if you use that one, they still maintain it. That it doesn't matter. Now this one is even good because your 50 EMA is in the upper side, okay, and you could have taken it on this particular day right here or this particular day. It's up to you when you would have wanted to take it, but I took it on this day right here. And the way it came out, you know, sorry, I'm not going to show you results because you've already seen them on my Telegram, so there's no point redoing that. Okay, so now if you look at it, I had, when I identified it, I had this candle right here, right, that candle there. Okay, so it was as big as this one, but then it pulled back, and when it pulled back, that's when I knew I'm about to strike. And now I want to show you something also very important. Now we are seeing a 4-hour ID50, but look at what happens. The market then also gave me an intraday type of a peak formation right there, and it breaks the neck, and then it pulls back to an ID50. Now this is 1 hour time frame, so I'm seeing this on the 1 hour, and I'm seeing this on the 4 hour. Now what is even yet shocking, that I'll show you, what is even yet shocking about this, I am seeing this way even also on the D1 time frame. This is so powerful, guys. It is so powerful. I'm seeing it even on the D1 time frame. So this ID50 appeared in the same spot, number one. Number two, both on D1, on H4, and also on H1. So imagine, that is the reason why you expected this whole big move away, because it had appeared in different time frames. And I was so much targeting this low right here. I was targeting this low right here, and guess what? They moved on the very same day. They moved my whole move on the very same day. Immediately when I saw that, I'm like, wow, this is really good. And well, I'd already taken my target because that's where I knew the market is supposed to go, but I was expecting this will happen until Friday, but it happened on the same day, which was a good thing. Now on the following day, even though I knew levels were still not enough, they had to drop even further than that, but I wasn't interested in that anymore. I had taken what was mine, but I could have traded that because according to levels, this could have been the third level right there. And then after that, I take a buy and start buying. So you can see that you can actually track a pair and say, okay, I took my ID50 there. That was my first level. I dropped down, I get to my second level, I drop down, now I'm on my third level, I'm taking a buy. You can actually do that, but I'm not that kind of a trader, so I was only looking for an ID50. So this is how it then worked out. Now in terms of pips, for those who love pips, you can see this whole move was 202 pips. The one that I took on GBP odd was actually about 187 pips. The one on Euro odd was actually 209 pips as well, but it could have gone all the way to 327 pips. And lastly, USD card, this one had gone 149 pips. So imagine, you literally get almost close to 1,000 pips just by trading ID50s on a single week. And because we are on 4 hour, it simply means this here is the start of the week, this is the end of the week. All right, so the market gives you a peak formation. Well, on USD card now, it gives you a peak formation, it drops, all right, it breaks the neckline, and then it ends the week on an ID50. See how interesting that is. It ends the week on an ID50, starts Monday, and it pretends like it's buying, and people panic and be like, oh yeah, it looks like we're going to be buying, we're going to be pushing up. And look at what happens next. The market quickly melts down. It just breaks down and goes all the way down. So this is how you can use your knowledge, guys. I'm just showing you a review of how you could have easily taken this on 4-hour time frames. And it's not only these pairs, there are so many pairs with these opportunities, but I'm just showing you the ones that you could have taken, which were so clear with ID50s on the 4-hour. But you can also use this on the 1 hour, the 15 minutes, the 1 minute, the monthly time frame, the D1, etc, etc. I'm just showing you the 4-hour because this is where I usually love to play around, because I know I will get weekly trades and trade away from that area. Okay, thank you guys. Hopefully you get as much knowledge as you can in this, and also back test it and see if it works. Cheers.